Home ownership. So you want to become a homeowner. Well, before you purchase a home, you should weigh out all the pros and cons to make sure that owning a home is right for you. Let's start out with the pros. First, a home is generally the largest asset most people will own, and thus the most opportune way for you to create wealth. As of 2022, the first $250,000 of gain from selling a home is tax-free for federal tax purposes, and it's $500,000 if you're a married couple, as long as you meet the IRS rules for owning a primary residence. It may allow for annual income tax savings. It's yours, and you can make it look and feel however you want. Now, the cons. If something breaks, you have to pay for it and fix it yourself, unlike when you rent. Moving flexibility is constrained. You may not like your neighbors. You may have to settle for something less than ideal. You now have more responsibilities than if you were to rent, such as home and yard maintenance, and it could reduce your liquidity because of the down payment and closing costs. Therefore, if you decide you want to own a home, you're going to need the following items. First, you will need a qualifying FICO score. Now, for a conventional loan, you'll need a minimum credit score of 620. If you need a jumbo loan, a minimum credit score of 680. For an FHA loan, a minimum credit score of 500 if you put 10% down, or 580 with 3.5% down. For a VA loan, there is no minimum credit score. However, many lenders prefer 620. And if you needed a USDA loan, there isn't a minimum credit score also, but most of them prefer about 640. Next, you will need to get pre-qualified for a mortgage. This will help you understand how much house you can afford, and it will also give the sellers more confidence that you can go ahead and close. Then, you should have enough for a minimum down payment. And I'm going to give you the down payments by loan type here. A conventional loan, you usually have to have somewhere between 3% and 15% depending on the lender of the loan. A jumbo loan, you need to have 20% or more depending on the lender. An FHA loan usually requires 3.5%. A VA and USDA loan, they don't require anything down. On top of the down payment, you should have enough for closing costs. These are expenses you pay to your lender in exchange for loan services, and they generally run between 2% and 6% of the purchase price. You may be able to get the seller to pay for them or have them wrapped into your mortgage if you don't have enough money for them. Then, at least 3 business days before you attend your closing meeting, your lender will give you a document which is called your closing disclosure. This will list out every closing cost you need to cover and how much you owe. Now, I'm going to tell you the list here, and it is quite lengthy, so just bear with me as I go through each of the possible fees and things you need to have. First, an application fee, an appraisal, attorney's fees, closing fee, courier fee, credit reporting fee, discount points, escrow funds, FHA mortgage insurance, flood certification, homeowners association fee, homeowners insurance, loan origination fee, lender's title insurance, lead-based paint inspection, owner's title insurance, pest inspection fee, prepaid daily charges, private mortgage insurance, property tax, rate lock fee, recording fee, survey fee, tax monitoring fee, title search fees, transfer tax fee, underwriting fee, and a potential VA funding fee. The next thing that you need is an inspection on the house which you plan to buy, which this is something you never, ever pass on, no matter the circumstances. This will tell you if there's anything wrong with the home, because the last thing you want to do is buy a house and then you have a ton of stuff to repair and it costs you thousands of dollars more. Next is an appraisal. This will determine the fair market value of the home, and it can assure you and the lender that the price you've agreed to pay for the home is fair. Appraisals are often used to determine the property taxes, which make them required in most counties. Some of the things that appraisers consider when they determine a home's value include the living condition of the home, home improvements, and comparable home values in the area. On top of all of this, you will need earnest money or a good faith payment, which is an amount that you need to put in an escrow account to show the seller you are serious about buying the home. The amount is usually somewhere between 1% and 3% of the purchase price of the home. If you were to walk away from the deal, you could potentially lose the money and the seller gets to keep it. And lastly, you will need a mortgage or cash to buy the home.